So if you like rectangles, you'll love triangles. It's because basically it's a converging of support and those resistance lines, either rising or declining. It could be, the triangle could go either way, and we'll look at some examples of that. But the trending range pricing is narrowing, and it'll look like a triangle. And once again, the breakout will usually occur in the direction of the original trend. Not always, but that's the idea, is it will tend to occur whichever way it breaks out, or when it does break out, it will tend to break out in the direction of the original trend. So be watching for that pattern when you're looking at triangles. But let's look at triangles now when we're looking and evaluating charts and pricing. So we remember from the rectangle lesson how we had two parallel lines, the resistance line and the support line. In this particular example, we have an ascending triangle. It looks like a triangle with a wider to a narrowing point. And this one is called an ascending triangle because it's going up in pricing. It's a continuation triangle where it's going up in pricing. You see how the resistance line at the top is parallel and is stable, and pricing, when prices rise to that, they hit there and they come back down. But as you see, the support line, instead of also being parallel, it's more at an angle, so prices don't come down all the way. They come down, but then they bounce back up. They hit the resistance line and they come down again, but not all the way to the previous level. They come down just a little bit and then they bounce back up. And you keep getting that going up all the way, down a little, going up all the way, down a little less, going up all the way and down a little less than that until it forms like a triangle, is what the pattern that you're seeing here. And really what in this example where there's ascending or rising prices, what this is saying is people want to buy, they just can't get through that resistance line. It's just too high, but they're not going down below the support line. In fact, the support line is starting to rise in conjunction where people are showing more confidence in this particular, let's say, this particular cryptocurrency investment as an example. So you can see the resistance line is steady and then the support line is rising up to this narrower point. So what should happen? At some point here, if the pattern continues, at some point it's going to the support line is going to get so narrow that it's going to just naturally kind of burst forth and burst through that resistance line is what we're looking for here. Establish the new trend and continue that existing trend, which if you saw on the far left, the trend was rising with a little dip, but otherwise it was rising before we got into the triangle, and it would continue that rising trend in the triangle. You can see as a rising triangle as well. One thing, if you're looking at this too, if you're able to get in and see a little bit more of a buying opportunity, if you see the triangle starting to form, you once again want to have enough data, but here's the example where if you can see it where it's starting to form, if you can get in towards the bottom there, you can actually ride the triangle out a little bit more and then see if the breakout occurs, so you get a little extra kind of bump there in the beginning if you start seeing the triangle starting to form. Once again, there's no guarantees on anything with technical analysis. It could completely go through that support line and go down, or there could be some kind of thing that happens, a world event that just messes everything up. But in normal trading patterns, this is a triangle and ascending triangle. Now you can also have descending triangles where you don't want to buy, or you might want to sell your holdings, or it depends on where you're at in the triangle and what you're pricing that you paid for something. But the idea is pricing is starting on the decline. Our support line is steady. It's steady, it's going down to the support line, but the resistance line is going down, it's eroding, it's getting closer to that support line. Prices are falling. You can see how the prices are falling over time from the top left to the bottom right. And you can see everything's moving down to a lower period it might get to a point where it like follow, an existing pattern or something where it might break through and follow that previous type pattern, which in this case, I didn't draw it as well on the left-hand side, where it might break through the support line. But the idea of a descending triangle is you're once again going on the descent part of it and break through the triangle. So triangles are very, very common and very used. I don't want to say common, I'm saying commonly used by technical analysis folks, because triangles are pretty easy to understand, and you can start seeing the patterns form, and you can start and it makes sense because of how people are buying and selling. But remember, nothing's foolproof, but if you start seeing triangles, you'll start looking for those triangles and see if they're heading in the direction that you want them to head to.